Hey everyone! Today we're looking at the next evolutionary step of the tortoise, which is my slowly developing and gradual approach to finding ways to trade on all or most of the coins on Binance futures. And there is cause for a little celebration. At least as of the last day of 2024, the higher order size tortoise algos finally broke even. Just a tiny little bit, but still. Let's see how that happened. The first batch of higher order size algos ran from mid-November to early December and was based simply on coin distance and side combinations that were at least a bit profitable on test algos. The results were not stellar. I kept them running with minor adjustments, waiting for things to get better, but the tortoise kept digging itself deeper and deeper. On this particular day, I finally had enough and turned the algos off at minus 76 USDT to my P&L, intending to make a complete revamp. First of all, I was starting to get the impression that I'm trying to eat the whole elephant at once, instead of, as the saying goes, one bite at a time. I wanted to focus my attention on some big and obvious wins that can, first of all, keep the tortoise above ground, give it something to stand on, and only then move on to more complex scenarios. Based on the test data, I decided to abandon the sell side altogether for now. The sell side tested very poorly, in no small measure due to the abnormal behaviors during listings, as I've covered earlier in diaries number 53 and 54, and also due to market conditions. At the time, the coin market cap fear versus greed index stood at extreme greed. I find the term itself really funny, extreme greed. Well, to me, it means that players are trying to push the prices to the moon, as it were. There is less resistance at the top, and therefore, the sell shots are less likely to roll back. And through the same sentiment, the buy-side shots may be more likely to roll back. And this is confirmed by the buy-side test results. So, buy-side it is. Next, I decided to really figure out what's going on with the 24-hour volumes, so that I could apply filters. Previously, I tried finding volume patterns in the overall data across all coins, to absolutely no avail. So I've increased the granularity and looked at the data individually for each of my groups of 15 coins at each distance. For instance, for this group of 4 coins, based on test results, I found some common ground where they performed better. It was from 80 million to 800 million, which I decided was the normal operating range for this group. The logic is that if the daily volume is below that, it means that there may not be enough liquidity in the order book and the shot size would be too unpredictable. Or on the other hand, the coin would be dead most of the time. If the volume is above the maximum, it could indicate a pump with the same resulting unpredictability and lack of rollbacks. And so I proceeded to define similar ranges for the remaining groups. It was all well and fine until I got to this group, which included Cyber, Dent, Dodo X, and Dodge. Let's look at their current daily volumes. Here it's about 10 million, again 10 million, less than 5 million, and then almost 2 billion. How do you find common ground among these? I guess you can't. You see, at the beginning, to simplify things, I've divided coins into groups purely alphabetically, so I ended up with some pretty absurd ranges, like 10 million to 2 billion. I'll get to regrouping a little bit later. So let's look at the results. The high order buy side with daily volume filters made a bit over 80 USDT for an ROE of 9.5 and a profit to loss ratio of 4. The very same coin distance combinations on the test algos without the daily volume filters during the same time period had an ROE of 3.7 and a profit-to-loss ratio of 3.28. Clearly, the volume filter cut off some profits, but more importantly, it cut off more losses. And that's how, as of now, the higher order size algos are beginning to break even. So now I'm looking to group coins based on daily volume. To get the ball rolling, I plotted, for all coins that had any trades for me, the range of their daily volumes from minimum to maximum. And the differences between coins were so vast that in order to reasonably fit the whole thing on one screen, I had to switch from a linear scale to a logarithmic scale, base 10, where each vertical divider is 10 times the previous one. So this is 10 million, this is 100, this is 1 billion, this is 10 billion, etc. Look at this. When presented visually, as we go up, we see the vastness of the differences. So many coins never even reach 100 million, while many others start at 100 million and above. Another useful way to visualize is this, where the areas of these rectangles represent the ranges between the minimum and maximum daily volumes. Look at Doge, it's at 15 billion, while something like Alpha down here is only at 9 million. No wonder I could never find a common range across all coins. It's like trying to find a common mass between a hamster, a cat, a horse, and an elephant, only by virtue of them being all land mammals. So I'll work on regrouping the coins based on daily volume under the assumption that there exists some normal operating range for these coins and that the coins with similar ranges have some sort of similar behavior and can be lumped together into the same algo. We'll see how it goes. Until then, thank you for being here with me and listening to what I have to say. See you next time.